Welcome to Profile Traders. This is Reza and this is my market analysis for Tuesday, February the 17th. So there are times in the market where anything that goes on around, either good or bad, has no impact whatsoever on the market, and market just climbs on a very tight narrow range and very low volume without giving any opportunity for the other side to conduct business. And that is exactly what we are seeing here. And usually when you see something like that, tight but very orderly, and then pause with no pullback, and then again all of it very tight range, that's all computer program. So right now there is a computer program in the water that is been on the buying on extremely low volume, as you can see down there, but it has been successful on taking price up no matter what news came out that could have possibly impacted the market. And such events are extremely usual to see going into a week of option expiration. And if they overdo it on the upside, right around Thursday or Friday of this week, we could then start to see some pullback. To look at the overall picture on a daily chart here, again you can see this very tight low volume up a grind on the daily as well. So now we are at a position of retesting this high on extremely negative volume divergence, but it doesn't matter. As I always say, between volume and price, price is a king and volume is irrelevant, because you can lose 10 points on extremely low volume situation, you still have lost 10 points. You can cry as much as you want that volume wasn't there, they won't give your money back. Now on the way up, if we can clear this double top here, or this retest of the top, we should then go touch right around 2145 or 2150, the upper resistance line, at which point we would have then traveled from 1973 or 4 all the way to 2150. That will be a hell of a sell. The other scenario is that we pop this double top very briefly and then we come back and close into it with vengeance and vigor, indicating to us that a possible bull trap on this new breakup has been in place. But as of right now, there is absolutely zero sign that there is even selling interest in this market. So I would assume that the Caligula orgy will continue. We are near 21. It's a matter of points to pop that up, and then we shall see if the pop above 21 is real or it's going to be a bull trap. For a bull trap to happen, at the bare minimum, we need to break 2080. If we break 2100 and come back again and stop at 2080, it could go back up again. We need to get a very swift reversal back down, as it would break above 21 and fail. And if it doesn't, then you know where it should be going up there, the touch of that resistance line. As for crude, I tweeted you an email, a tweet last night, warning you that we were at the touch of this main major trend line down. And I said that we should either go towards 58 if it breaks up of the trend line successfully, or we should go down towards 47 if we break down successfully. Well, today it did break up and it did break down and it ended up pretty much where we were last night. So it's the same scenario again. On the top of that, you need to inject now towards crude the geopolitical factor. It's back into the play. Middle East is burning fast and furious. ISIS is out of control. Nobody has leadership on what to do with them. It's a massive mess. And on the top of that, you add this colossal cold we have in a huge part of the United States, and a oil train that derailed, which made this first initial sell on the downside to be completely reversed in a matter of 2 or 3 half hours entirely, and then closed at the very top of the day. Now we do have a rejection at the top, so resistance now becomes 53.60. If by tomorrow morning we are not back above 53.60, then I'm expecting that we should get a pullback towards 51.81, at which point we have to assess price when it gets down there in order to see if this was just a pullback for more up, or this rejection of the top has potential to hold and be potentially a weekly high for this week, but that we don't know yet. As for gold, we had a very bearish retracement of this push down, and then finally it break out of it, and then today we got continuation down, and it did break the red line that I drew on the sun, and I told you if we do break that line, then we are going towards 12.010 and then 1200. We got very close to that. So now obviously 1200 is the main line of support. We do break 1200, we're gonna go for a test of our daily trend line down there at 1190, 1197, 1195, and then if we do break that, we are going straight towards 1170. So pray for the long that they do hold it above 1197 to 1200, which is now extremely of support. If we do hold that level on the overnight or during tomorrow early morning, we are not below 1200, then I believe that we are going to go up tomorrow first towards 1217, and then if 1217 can break on the upside, we should go towards 1225. So that's it for today. It was a very weird and quiet day for most of it. I don't know if it's the cold or not. This was Reza with profiletraders.com. If you wish to join us, you can get all the courses and 1 year membership to the trading room, all for $550. www.profiletraders.com. Thank you for listening.